Hello friends, this is Raj Sastry from Raj Option Trading. Today is November 1st, 2021 and we will talk about FINVFinVolution Holdings, ticker symbol TIGR. It's into financial services, mainly a stockbroker from China. And they got a platform here. You can invest globally in various markets using TIGR application here. And these guys have a nice looking website here. As you can see here, there's a lady trying to buy and sell stock using her mobile app. I think that's the interesting fact about this company. They got a simple platform. You can buy and sell stocks globally. So with that, let's jump in and get started. So we will look at a quick company overview and major ETFs holding TIGR and competitive landscape with the peers, and look at few charts, look at the financial summary of this company and stock performance, and finally let's give a verdict on its if it's good to buy the stock at these levels or not. So with that, let's jump in here and look at this company in a little more detail. As you look through here, they have a superior investment experience with their TIGR application here. It's a well-known broker, more than 1.4 million account holders, a lot of trading volume as you can see here, 2.219.1 billion. That's a good trading volume number here. And they got one-click subscription for US and Hong Kong IPOs here. And as you look through here, active community, no minimum deposit, and nice professional management. So overall, looks like it's a good platform. They're trying to do the right thing here. And as you look through the company here, it's up FinTech Holdings, ticker symbol TIGR. Stock price is around $6.47. Market cap is about $1 billion. And this provides online brokerage services focusing on Chinese investors. And they got this nice platform which allows you to buy and trade stocks, options, warrants, and so on and so forth. So with that, if you look through the stock chart here, this is a weekly chart. As you look through, stock has done great back in say 2020. As you look through here, nice looking chart. Even 2021 stock has done great, but sometimes in March time frame stock fell off the cliff, then went back higher. Now it's down. As you look through here, as you look through the support level, there's a nice support level at these levels here. That's why it may be good to slowly start looking at this company and slowly see if you can if it makes sense for you to buy at these levels. And from an analyst consensus perspective, analysts are saying moderate buy, with the one analyst having a buy rating. That's why it's a moderate buy here. Not too much coverage from analyst perspective, but I think it's a moderate buy here according to this consensus estimate. As you look through here, they complete the acquisition. That's a good one here. Chinese online broker shares dropped after criticism from central bank in China. Mainly what Chinese central bank is saying is, if you want to buy and sell stock outside of China, then you got to get a license from Chinese central bank. That's why these stocks came down big time, and now these both Future and TIGR, they're trying to comply with the authorities here and get some licensing. That's why stock dropped big time. Could be a good buying opportunity. And as you look through here, no other great news here, but generally, stock is down big time after Chinese government warns online brokerages. Now we will jump into the CEO here. We got Mr. Wu here. He's the CEO. Looks like a young dynamic chap here. And we got here, from a Glassdoor perspective, 2.9 reviews and 55% recommend this company to a friend here. Not a great review, but I would take it. Generally, these Chinese companies, their ratings typically at times low rating because the culture is different in China than US, so it's a little more authoritative than US. That's why I think it's okay. 55% rating could be okay, but I'm sure they will improve it as we go forward. And from a CEO perspective, looks like he's been in the company since 2018 and he's got relevant experience. He's also has some honors in the business world. That's a good story here. And he's also elite under 35. And, I think he's got some good popularity and good credibility here. So with that, I think CEO checks out here. He's trying to do the right thing and take the company forward. As you look through here we got few exchange traded funds or ETFs with TIGR. We got iShares Core MSCI. They hold a lot of money here in TIGR share. We got EEM, again emerging market. They hold nice chunk of TIGR shares. And we got MSCI China ETF, again nice chunk here. And from there it drops off, as you can see here. So in a nutshell, we do have significant amount of ETFs holding TIGR shares here. And as we look through the performance here, we got these share ETFs holding Chinese TIGR stock here. They've done pretty okay in 1 year. They've done great in 5 year and 10 year. That's why I think it's okay to look at TIGR, given the stock is down big time after this Chinese authorities saying they got to get some additional licensing done. So let's jump in further here and look at TIGR and its industry peers. As you look through here, we got all these Chinese stocks in the financial markets here. As you look through, I've sorted this by 1 year performance. Couple stocks at the top, they don't have 1 year performance yet, but you got here stock like we got FinVolution, little known company, $6.12. Nice sales growth, nice gross margin, as you see here. And stock has done nicely, 211% in 1 year. And then we got here a few more: Btcm, a Bitcoin play; HX, QFin, one of my favorite here; Futu, which is a Hong Kong. It's not China-based company; it's a Hong Kong-based company. Has done great here. And then we got Nova. We got TIGR here. TIGR, as you can see here, up still 36% for the year, but red tape all along, as you can see here. 6 month, 3 month, 1 month, all red here. That's why it's intriguing to look at TIGR at these levels and see if it's worth buying TIGR at these levels here. And then you got few more as you look through here: QD, DCF, and so on and so forth. Keep watching the gross margin here. If the gross margin is not great, I would skip. I would not worry too much about it. But companies like Lexi here, LexinFintech, you could still look at this stock. Low price stock here, nice gross margin, nice sales. I would look at this one. It's a great one here. And I think if you are a little bit conservative, avoid the stocks with the low gross margin. Go after candidates like QD, which has a nice gross margin, and TIGR, and so on and so forth. So with that, what we'll do is we'll look at a couple of these companies in a little more detail and see if you can buy some of these stocks. Before you do that, keep watching how the stock is doing in 1 day, 5 day, 10 day. If it is turning around like BTWN, trying to turn around, that's a good candidate. MPAC, same story, trying to turn around slowly. It's also a new IPO, looks like. As you look through, we got one more, STNG, trying to turn around. And those are the candidates you can look at from a turnaround perspective. And same story with the little stock here, PHCF, trying to turn around here. So with that, we'll jump in and look at few candidates, few charts, and see. From a chart perspective, we got FinVolution here. As you scan through here, stock is trying to, as you see here, trying to see where to go here. Slightly bullish right now with this, trying to curve up here. On the balance volume is good here. So I would be a buyer of FinVolution at these levels here, given it's trying to go higher with a nice on the balance volume. Then you got Btcm, a Bitcoin play. China has got a lot of news about regulating Bitcoin here. That's why this came down pretty significantly. Right now it's trying to see where to go. I would be a buyer of this Btcm slowly on the down days and accumulate. Then you got HX, looks like a huge short squeeze. I would probably skip this one for now and look at QFin, one of my favorite. As you see here, stock came down big time. Now it's trying to go, trying to see where to go here. Nice on the balance volume. Next, we'll look at a few more here. We got Futu here. It's a Hong Kong-based stockbroker. Again, came down after Chinese authorities, warned against, globally buying and selling shares without licensure. At this time, stock is completely, negative biased right now, bearish. I would be a buyer of futures slowly at these levels here. And then you got Nova here. Nova, as you can see, a nice rally here. RSI is, as you can see here, 69. I would wait for a little pullback here before I pull the plug. Then you got TIGR, completely beaten down here, bearish. This is when I typically jump in and buy some and accumulate slowly. And then got Lexi here, again great numbers. I would slowly buy some Lexi at these levels and take it from there. So with that, let's jump in here and look at Up Fintech TIGR in a little more detail and deep dive. As you look through from the numbers here, we got nice EPS here. Trend is going up. That's a good sign here. Company is profitable right now from an earnings per share perspective in 2020. And we got annual sales. I love this clip here. Nice looking clip here. Company is making money, bringing in the revenue. And from a shares outstanding perspective, they're keeping the flat shares outstanding. That's always good. I love to see flat shares outstanding or lower. Look at the quarterly revenue here. These are the quarterly numbers now. Nice looking quarterly revenue here. That's a good story here. Company is doing something right. We got gross profit here. Gross profit is also nice uptrend here. That's also good. Net income perspective, this is a net income here. Company is making money. Nice net income here. They've done good in 9/30/2020. The quarter which ended I think a year or so ago. So with that, from a numbers perspective, I think company is doing nice here. And they got a lot of negative press with this Chinese government and licensing and being careful to really trade globally. I think that's where these companies are working with the Chinese government and making sure they comply with the authorities. So with that, let's jump into numbers a little more here. Stock price is around $6.47. Market cap is about $1.5 billion, as you can see here. As you look through here, we got a market cap 1.7 billion back in 2019. Keep watching. Came down, 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 down. Right now, market cap is 1.5 billion. So this is why you got to be a little careful here with the stocks like this. It's a Chinese stocks. In China, as you know, there is a lot of regulations and government authorities are a little more strict in some of these names here. That's why you got to be careful here. This one is not for everybody. But if you can take some heat here, it's a good one to buy at these levels and take it from there. And from stock price perspective also, as you look through here, it was the $12 stock back in 2019. Look what's going on now. It's a $6 stock. If you're an option buyer, you got really toasted here. You got really bad. You lost money. That's why with stocks like Up Fintech here or TIGR, don't buy options. Instead of that, buy stock outright. It's a low price stock. You can hang on to it longer. And from a sales perspective, it's done nicely in the past, but right now there's a little bit sales drop, as you can see here. This could be our opportunity to slowly jump in buy, given it's so ugly from a chart perspective. Quarter over quarter sales perspective also doing great of late. In 6/30 when they announced, it's a little bit not so great compared to previous quarters. Still, I would take this 98% revenue or a sales change here. That's a good number. From an earnings per share perspective, in the recent quarter, they became negative here. That's not a good trend here. I think we got to keep a close watch on this one here. They do have good amount of cash here, as you can see here. They're not going to go out of business anytime soon. It's one of the stable companies. They got low debt, as you can see here, which is a great story. They're reducing the debt, which is also good. They don't have any debt to equity ratio is very, very, very low. They don't have free cash or operating cash flow, which is not great, but I'll take it for now. And gross margin, the trend is negative right now as we head into 6/30 2021. And operating margin, net margin, ROE, all in the negative territory. From a trend perspective, it was doing okay back in 3/31 2021. Now it's a little bit deteriorating. And PE perspective, price to earnings perspective, it's very expensive, but price to sales perspective, it's okay. So by looking at this chart, I can clearly tell you this one is not for the folks who are a little more traditional and you want to look at some great stocks and hang on to it. Instead, this is for contrarians. You want to jump in, buy stocks like up fintech when it's down, and have some good bet that this might go higher. So that's why this stock is not for everybody. This is for contrarians. You could jump in when the stock is down like this and invest and take it from there. As you look through here, we got numbers here. When they announced, back in the June quarter here, the revenue was missed by 15 million here. That's why stock came tumbling down. Then they had this whole talk about Chinese government asking why these companies are globally trading stocks when they don't have global license. That's why stock came even down here. That's why it's an intriguing play at these levels here. Given stock is down so much, you could slowly start accumulating and take it from there. And as you look through here from a quarterly earnings perspective, they had significant increase in newly funded accounts with the total account balance. That's a good story here. They added 153,000 or so funded accounts. Nice increase, 353%. As you look through here, they also had total revenues of 60.2 million, up 98%. That's a good one. I think I would take it. And from a financial highlight perspective, they had total revenue increase, nice 98.7 here. Net revenue also increased. And as you look through here, net loss also increased here, which is okay for these type of early companies. And total account balance increased. That's a good story. Total customers also increased here. That's a good one here. So overall, company trying to do the right thing, early innings. Now with the government regulations and asking the questions around, trading globally. That's why stock came tumbling down here. As you look to the performance here, from a yearly performance perspective, 2020 was a flagship year for this company. It's done great, 123%, but stalling in 2021 so far. And 2019 was also not great year for this company. So clearly, this company has got its ups and downs, as you can see here. And as you look through from a monthly performance perspective, last 4 months down big time, as you see here. So that's why at this time it's really a beaten down stock here. You could slowly start buying. And as you look through here, companies has down 25% back in March, come back up nicely, had 11% drop, came back nicely, had a 19% drop in 2020 March, came back nicely. That's why the moment you see these type of drops and see how the company has done in the past in those big drops, that tells you it may be good time to buy slowly and acquire and accumulate at these levels here. And then let's look at the weekly performance here. More reds than greens here. Given last 4 months is down big time, that's why it's okay to buy slowly. And if you look at the daily performance, more reds than greens here. Off late with all this Chinese news about licensing practices globally, that's why stock came tumbling down. Good to slowly accumulate and buy at these levels. And now let's look at a quick monthly performance matrix. Last 4 months, ouch, down big time. If you're holding call options in this, it's a really difficult situation. As you look through from a pattern perspective, typically around March time frame, it comes down big time. Then a nice uptick here. Typically around September time frame, again big drop here. Then typically around November, December timeframe, nice uptick here. That's why I think it's good to buy with this huge big drop here. Generally, December, November, December, even Jan, Feb, can be good for this company. So with that, let's jump in here and look at stock chart here from a technical perspective. As you look through the chart here, this is a 4-year chart. Stock has been all over the map, has done nicely. $38 now came tumbling down to $6.47. Looks like somewhere here there's a good support level here around $6. That's why I think it's good to jump in and buy at these levels and slowly accumulate. And this is a 4-year weekly chart, as you can see here. Now let's look at a smaller time frame. This is a 1-year chart and 1 day. As you look through here, quarterly earnings, stock went up a little bit. Quarterly earnings, stock went up. Quarterly earnings, stock came down. Right now, from an implied wall perspective, very high. That's why it's not a good idea to buy any stock option, call option here. You'll be paying too much here. And from a DMI perspective, right now it's the bearish, red line above, blue line going down, bearish at this time. From a on the balance volume perspective, as well as check-in money flow perspective, it's bearish, indicating smart money is flowing out of the stock here. That's why it's a contrarian play here. Stock is down big time. I think that's when you kind of slowly accumulate and hold a nice position and take it from there. And as you look through here from an option market perspective, stock is at $6.47. Keep watching here, 7.5 strike price for April of next year. Nice open interest here, nice volume. Open interest is around 1.7K, 1,700 contracts here. That's a nice number. Folks are betting the stock will go higher. Look here at $15. Nice 4,000 contracts traded here. Even up at $20, nice call options traded. That's why in the options market, folks are betting the stock will go higher. There is some put options also, as you can see here. But the numbers are not that significant, compared to call volume here. So with that, let's jump in and see what the option statistics here. As you look through here, total calls traded 37,000 contracts, total puts traded 16,000 contracts, much lower here. That makes the put call ratio 40.43. This is why in the options market, people are betting up Fintech or TIGR will go higher, by next year. So with that, let's jump in here and see what we can do now. We looked at the fundamentals, we looked at the technicals. Now let's make a decision here. Stock came down tumbling because Chinese central banker warned online brokerages not licensed in China or acting illegally if they serve clients via internet. That's why stocks like Future and Up Fintech both, heading sharply down here. These companies will comply with the Chinese government. It's just a matter of time here. And we've got total revenue here up nicely, 98.7. That's a good one here. And they're also acquiring talent and companies. And from a growth perspective, they added 51 clients here. That's a good news here. These are big private firms. And also their wealth management business is doing well here. Over 50% clients having the US cash trading accounts here. That's a good news here. At least they're humming along pretty nicely. They also added more customers with the deposits here. 215% year over year. That's a good customer acquisition here. So with all these technical details and fundamental details, given the stock is depressed at these levels and pulled back nicely, and by looking at its previous historic trends, I recommend accumulating this stock moderately on the down days and take it from there. So with that, thank you very much. Happy investing and trading. Please subscribe.